Our next wonderful speaker, all right, is Jordan Goodman. He is America's money answer man. He is an expert contributor to Money Magazine and NBC News. But most of all, he gives everyone practical, brilliant ideas that you can put to work in your life to improve your financial present and future. Please give a warm welcome to Jordan Goodman.
Thank you, Brian. Thank you very much. Okay, so we're going to do a lot of interesting things today to help transform your personal finances. I'm going to do it to you, and we can do it to your audiences as well later. I find that there's a tremendous amount of financial illiteracy in America right now. People go through school, they know everything about Etruscan pottery and Greek philosophy, but what do I do with my 401k, or how do I do a better mortgage or credit card? That's a complete mystery to most people. This is what has been my passion for a long time. There's a huge amount of wasteful spending. And I'm going to show you some specific examples that people just spend all kinds of money. They're wasting money. They don't even know they're wasting money in many cases. People don't also know about how to make their money grow. There's literally about $10 trillion today in CDs and money market funds and savings accounts sitting there earning nothing. And the banks say, great, you'll give us your money for free, we'll take it. But there's lots of better things they can do with it. So my mission always has been to empower people to make the most of their money in every way possible. I do lots of call-in radio shows and all kinds of different things. I'd love to help people in this particular area. So I'm going to give you a few examples in the short time we have of some very powerful financial strategies. And as Brian said, have your papers and pencils ready, because I'm going to give websites, specific places you can implement these specific strategies. So we're going to get right started right away here. First one's called mortgage equity optimization. Now this is a strategy that literally allows you to pay off a 30-year mortgage in about 5 to 7 years on your existing level of income. This is not something you're ever going to hear about from a local bank of any kind. So it's based on your existing income. It can literally save you tens of thousands, sometimes even hundreds of thousands of dollars in needless interest that you don't even know you're wasting your money in many cases. The unique part about this is your money is actually working for you instead of the bank. The current system right now, your money is working really well for the bank. You keep it there, sitting there, savings accounts, CDs, earning nothing. You pay them interest for 30 years, and they think you're a great customer. But I'm going to reverse the complete situation here. So what you do with mortgage optimization, you open a home equity line of credit, a HELOC as they're known, which is a liquid line against your house. You can take money in, you can take it out whenever you like, electronically, use checks, whatever you like, in addition to your first mortgage. So you have your first mortgage, say you have it at a good rate, no problem. But you're getting a second mortgage, which is the HELOC, which is this liquid line against your house. You keep your income, which is normally sitting in your checking account earning zero, in the HELOC. Because HELOCs are based on what's called average daily balance. How much do you owe today? You had $1,000 sitting in your checking account earning nothing. You put it into the HELOC, and instead of owing $50,000, you now owe $49,000. So you're pushing the balance down on a regular basis. So all the income you get from salary, from dividends, from interest, from royalties, whatever it may be, you're getting it in the HELOC, pushing your balance down on a regular basis. You can write large checks from the HELOC to pay down your first mortgage. I'm just going to go through a simple example of how this works. And then depending on how your cash flow, your HELOC can be paid off in 9 months, something like that. So I'm just going to give you a simple example of how this might work. Say you had a house worth $300,000. I'll just make up a number here. And say you had a $200,000 first. Say you took out the HELOC for $50,000. You just open it up for, and you just open it. You'd write a $50,000 check on the HELOC towards your first. So now instead of owing $200 in your first, you owe $150. Then you use this technique, you have your income in the HELOC, you're pushing your balance down every day, and after say 9 months, a year, however long it may be, the HELOC is paid off. You do it again. You write another $50,000 check on your HELOC towards the first. Now instead of owing $150, you owe $100. Do the same thing, do it twice more. Your first is now paid off in, say, 4 years. You pay off the HELOC, you are now mortgage-free on your existing level of income. Your money is working for you every day, pushing your principal down. Instead of the traditional system, where you have a 30-year mortgage, you make one payment a month, and you pay very, very little amount of principal for many, many, many years. And meanwhile, your money's sitting in the bank, earning nothing for you. See how that makes your money work for you? Sometimes people have a hard time getting their mind around it, but it's very, very powerful. So you're making daily progress on paying down your principal, your mortgage balance, and you're making accelerating progress as opposed to making very little progress once a month. So that's a huge difference. Now, the three things you need to make this work. You need positive equity in your house. to be able to borrow against it. If you're underwater, there's nothing to borrow against. You need a credit score of maybe 680 or higher to qualify for the HELOC. It's a decent credit score. And mostly you need positive cash flow. You need more money coming in than going out because that positive cash flow is what's constantly pushing down your mortgage balance. So with those three, which probably most of you would have and most of your audience would have, you literally can save tens of thousands of dollars in interest and pay your mortgage off much, much, much faster. And there's a free website, truthinequity.com, that'll actually model it for you. You go on there, they have what's called a personal profile. You put in all your numbers, your income, your expenses, your value of your house, your mortgage, and they say, based on what you're doing today, it's going to take you 28 and a half years to pay off your mortgage. With the numbers you just gave us, it'll be 6.5 years, whatever it comes out to be. And then it's constantly changing as your income changes and so on. It's just an amazing thing. So that is literally going to save you a huge amount of money, and banks will never tell you. You go to a banker and say, I'd like mortgage optimization. They have no idea what you're talking about, and frankly, they don't want to know because they're real happy with the current system right now. Okay, so that's mortgage optimization. Any questions about that before I go into some other things? Will make sense to you? Good, okay. On we go. Earn safer high yields on your cash. We have today what I call the saver's dilemma, which is that you keep your money in a savings account, a checking account, a CD, earning zero, basically. And even though the Federal Reserve has raised interest rates 3 times last year, they're probably going to raise them 3 times this year, banks are not raising what they're paying on deposits, they're raising what they charge on loans. So the bank's profit margins are widening, they're happy, bank shareholders are happy, but savers are being really discriminated against terribly. So cash basically gets zero. But if you go into long-term bonds, you have interest rates rising pretty sharply. Even today, they were up to about 2.9% on 30-year treasuries. I think they're going to go up into the 3.5% range. So if you have money in bonds, you're going to be losing a lot more in principal than you're earning in interest. I mean, a few months ago, long bonds were 2%. Now they're 2.9%. You would have lost maybe 10% of your principal while earning 2.9%. So that's not a particularly good alternative either. Not only individual bonds, but bond funds, foreign bonds, municipal bonds, corporate bonds, every kind of bond out there, both individually, inside of 401k. Lots of people are losing lots of money in bonds and don't even know they're getting hit. So this is what I call the saver's dilemma. You get cash on one side, earning nothing. You're getting hurt on the long end side. So here's an alternative for you that's going to kind of solve the saver's dilemma, what are called secured real estate funds. And there's a website for that, securedrealestatefunds.com, as an alternative. This is something that pays an 8% yield, annual yield, in monthly amounts. So you're going to get monthly checks at 8%, and then you can either take the checks monthly or you can reinvest them if you like. Securedrealestatefunds.com, right at the bottom here. So it has minimal unit valuation. It basically stays at $10 a share. So it doesn't go up and down in value as interest rates or the stock market fluctuate. The minimum hold time is 1 year, and after that you can get your money whenever you like. Minimum investment's $5,000 to get into it, which is very low for something like this. You can do it inside or outside an IRA. And what they're doing is they're lending to a diversified portfolio of commercial real estate projects around the country. They'll do retail housing, they'll do medical offices, student housing, assisted living, all kinds of different things, diversified geographically and diversified by different types. And they've had a very, very long track record of doing this kind of thing. So here's a way for the average person with $5,000, if you don't need the money for a year, to get 8% with no market fluctuation as opposed to zero in cash or long bonds where you're going to be losing a lot of money, I think, as interest rates go up. All right, so this is one of the news funds, what are called a Regulation A+ fund that was authorized by the Jobs Act of 2012. People often call this crowdfunding. It's a way the average person can get access to. In the past would have been only institutions could do it. All right, so now you're earning 8% on your money. Any questions about that? Make sense? You feeling a little richer yet? You want to get richer or you got enough? More, right? I always hear more. All right. Okay. Selling your life insurance policy. Now this, again, is something you're never going to hear about from an insurance company. Typically what happens is people have a life insurance policy that they either don't need anymore, say their kids are now self-supporting, or they can't afford because the premiums keep going up. And what most people do, they let the policy lapse. They put money into this for years and years and years, and they just basically get nothing out of it. They've been insured, but they're not getting anything out of it. and they let the insurance companies off the hook. So the insurance company's real happy. They've gotten premiums for you for years and years and years. You let them off the hook. What you can do is you can sell that policy in what's called the life settlement market, where institutions or individuals are willing to buy it for literally hundreds of thousands of dollars. So you could either tens or hundreds of thousands of dollars. What happens is the buyer of the policy becomes the death benefit beneficiary. So they buy the policy, they pay the premiums, and when you die, they get the money, they get the death benefit. But you get cash right now. Now, frankly, the older you are and the sicker you are, the better it is because you get more money. The people buying the policy would rather that you not stick around too long. Okay? So if you have like emphysema, that would really be wonderful, you know? So it's an amazing situation. So if you're older, I would say 65 plus, this might be good for your parents or something, you can literally get hundreds of thousands of dollars. And I've seen it. So you have $1 million policy, somebody buys it for $300,000. When you die, they get the $1 million, so they triple their money. But meanwhile, you have $300,000 right now, as opposed to letting the policy lapse. Here's a free website, fundinglife.com, where you can actually see what your policy is worth. They put buyers and sellers together. They have more buyers than sellers right now. That's very aggressive. People, if they see a policy they like, the buyers are competing with each other to pay you hundreds of thousands of dollars. Again, this is something you'll never hear about from a life insurance company. All right, on we go. So we've paid your mortgage off in 5 years. You've got your income going from 0 to 8%. We've just given you hundreds of thousands of dollars for your life insurance policy, and we're just warming up here. Okay. Refinance your student loans. This is the problem of this generation. $1.4 trillion in student loans outstanding. The average person has $38,000 on graduation. These are 30-year loans at very high interest rates in many cases. So what a lot of people don't realize is you can refinance all of your federal loans and private loans into one at a lower interest rate in the 2 to 3% range, saving you a huge amount of money and allowing you to pay them off much quicker. There's a place called credible.com, which offers a clearinghouse where you go to one place and they have like 6 or 7 different lenders offering different deals, and you do it takes 2 minutes on their website. You fill in your information, and they say what your new payment would be. You click a few buttons, and you have just refinanced your student loans to pay them off at 2 or 3% instead of 4, 5, 10, whatever it may be. And this is a whole new, in the last 5 years, this has kind of come up. People never used to be able to refinance student loans, but this is a big area. So that's something that can help an awful lot of folks. All righty? On we go. Refinance your car loans. People have taken on a huge amount of car loans. They've got these wonderful cars, but they're losing their cars. Repossessions and people defaulting on their loans have been soaring lately. They're double over what they were a year ago. So that's not good. You really don't want the repo man coming in the middle of the night and you're shooting him off with a shotgun or something. This is not a fun thing you want to do. So what you can do is refinance your car loan to a much more affordable payment by changing the maturity of the loan. So there's a free website called myloangen.com where you go in, you put in how much you owe on the car, how many more months you have to go, value of the car, interest rate, and then it gives you a dial that you can choose what you want your payment to be. Say you're doing $500 a month now and you have 3 years to go. You move the dial out to, say, 6 years, and your payment goes down to $250, and the car's going to last anyway. So now you've just made a payment that's more affordable, and you can avoid the repo man. In fact, what the lenders are doing today, they're putting a device in your car that if you don't make your payment, they will literally turn your car off, disable it. You're driving along the highway, and it's like, my car just died. Oh, I didn't make my payment. And then they know exactly where to go and pick you up, so it's much easier for the repo men today. That is very dangerous, I agree. But this is the way we talk about technology, that's what's allowing people to happen. So for a lot of people, this is going to avoid the repo man coming to take your car away. And I'm going to give you one more, special mortgages for heroes. Now, heroes are defined as military, police, first responders, doctors, teachers, veterans, all kind of people in this kind of service. It's nice you go in the airport and say thank you for your service, but this is actually giving them cash, which is better. So they qualify for very significant discounts on the mortgage rate, fees like everything that goes into a closing of a mortgage, and then you actually get a rebate of part of the realtor's commission. It can literally be like $5,000 if you can count yourself as a hero, and a lot of people don't even know these things exist. So here's a way of actually giving money back to people who are giving all the time, but this is going to help them financially. A free website for that, heroescomefirst.com. And either a hero or somebody who knows a hero can just save themselves a ton of money on mortgages that way. So I've just given you a small sample of the kind of things I like to offer audiences that can help people make a dramatic difference in their lives. And I like to, as you say, give specific resources and things that can actually help them and help them transform their lives. So you see what we've done. Your income's gone from 0 to 8. We've paid your mortgage off in 5 years instead of 30. We've given you hundreds of thousands of dollars from your life insurance policy. We refinanced your mortgage. We refinanced your car loans and your student loans. I hope you're feeling a little bit wealthier. In 15 minutes, I did the best I could, but there's a lot more. Thank you all.